Hello and welcome to G2's weekly market update. For the week ending 20th February, global markets moved higher as investors reacted to a landmark US Supreme Court ruling that overturned sweeping global tariffs, easing trade related uncertainty. Markets were also influenced by evolving inflation trends, central bank policy debates, and mixed growth signals across major economies. Let us take a closer look at how markets performed this week. United States. US equities entered the holiday shortened week higher, rallying on Friday after the Supreme Court ruled against the Trump administration's global tariff measures. Markets were closed on Monday for President's Day, while rising geopolitical tensions between the United States and Iran supported higher oil prices. The Nasdaq Composite led gains, rising 1.5% and posting its first weekly advance since early January. The S&P 500 and S&P Midcap 400 gained over 1%, while the Dow Jones Industrial Average lagged but still finished modestly higher. Federal Reserve minutes revealed divisions among policymakers. Some officials favored easing if inflation cools, while others cautioned that rate hikes remain possible if price pressures persist. Supporting that concern, core PCE inflation accelerated to 3% year over year in December. Economic momentum softened, with fourth quarter GDP slowing sharply to 1.4%. Business activity eased to a 10-month low in February, so forward looking expectations improved. Housing data was mixed as declining builder confidence contrasted with a stronger than expected rebound in housing starts. In fixed income markets, treasuries declined as yields moved higher. Investment grade credit remained stable, while high yield bonds outperformed alongside improving equity sentiment. Europe. European equities continued their strong run, with the Stocks Europe 600 reaching another record high and gaining over 2% for the week. Sentiment was supported by improving earnings expectations and increased diversification away from US technology stocks. Major markets across Germany, France, Italy, and the UK posted solid gains, with the UK's FTSE 100 also touching a new intraday high. Economic data was mixed. Eurozone industrial production fell more than expected in December, but February PMI readings surprised to the upside, with new orders rising at their fastest pace in nearly 4 years. German investor confidence dipped slightly, while speculation around ECB leadership added some policy uncertainty. In the UK, inflation eased to 3.0% year over year, while unemployment rose and wage growth slowed, strengthening expectations for a potential Bank of England rate cut as early as March. Japan. Japanese equities edged lower, with both the Nikkei and Topix posting modest declines amid softer global risk sentiment. The yen weakened toward the 154 level against the US dollar, while 10-year government bond yields declined after the Prime Minister reiterated a commitment to balanced and responsible fiscal policy. Japan's economy returned to growth in the fourth quarter, but expansion was weaker than expected as consumer spending cooled. On a positive note, consumer inflation slowed to its weakest pace in 2 years, easing cost of living pressures. China. Mainland Chinese markets were closed for much of the week due to Lunar New Year holidays, while Hong Kong markets ended slightly lower after reopening. The IMF raised its 2026 growth forecast for China to 4.5%, but emphasized the need to accelerate the shift towards consumption led growth through strong policy support and structural reforms. Policy developments remained in focus as China raised VAT on telecommunication services, raising profitability concerns amid slower growth. Geopolitical uncertainty also resurfaced after the US briefly updated and then withdrew a list of Chinese firms allegedly linked to military support. G2 takeaway. This week underscored how policy decisions from court rulings to central bank guidance continue to shape global markets, while the rollback of US tariffs provided short term support to risk assets. Investors remain cautious amid slowing growth, sticky inflation, and ongoing geopolitical risks. Diversification and policy clarity remain key as markets navigate an increasingly complex macro environment. That is your G2 weekly market update for the week ending 20th February. Thank you for watching. Do not forget to like, share, subscribe for more weekly insights from G2. We'll see you next week. Thank you.